Welcome to Tax Tips Tuesdays. This is Terry Robinson. Thank you so much for always having your dial set to AM 1320 or FM 103.7. And thank you to those who are listening via the Pure Radio app or via our website at pureradiojax.org. I want to welcome back to our Pure Radio studios Tim Raines. He is with Patrick and Raines, a local accounting firm. Hello, sir. How are you?
Hey, we're doing great. Happy to be here.
And would you introduce who is joining you today via the phone?
Hey, today I've brought Mark Patrick, my partner, on board, as well as Mary Odell, our assurance manager.
Mark, how are you today?
I'm doing great.
And Mary, thank you for joining us for the first time.
Thanks for having me.
So Tim, tell us about Patrick and Raines.
Patrick and Raines, basically we work with a wide range of clients and industries for about over 35 years now. We've had an opportunity to work in a lot of different sectors, not only throughout Jacksonville, but in the surrounding areas. Some of our favorite areas to work in: construction, healthcare and medical, manufacturing and distribution, transportation, logistics, not-for-profit organizations, and restaurant and hospitalities. So really, if you ever need an accounting firm that can provide you good personal attention to help you understand your financial situation, feel free to give us a call at 904-396-5400 or join us online at www.cpasite.com. www.cpasite.com, and we'll be happy to help you make sense of your numbers so that you can have a good future.
This is tax season, and I'm sure your hands are full.
Well, it is kind of busy. You know, we've had 6 major tax laws in the last 18 months or so, but what we do is not only compliance work, but also consulting work. I kind of tell it like every good book, every good movie kind of follows a predictable pattern. And I call it the story of the human heart. You have a protagonist, the main character. You know, at some point in the movie, they're faced with some major experience or something they need to overcome. And then there's a turning point in the story where usually a guide will show up and kind of bounce them in the right direction, get them back on track. So ultimately, the protagonist ends up being the hero of the movie. Well, we at P&R, we believe that the client should always be the hero. We're merely the guide along the way. So I like to think of myself as I'm the Yoda to the Luke Skywalker.
I love it. And let's remind our listeners about that new tax deadline.
Yeah, the deadline has been extended for personal returns. So instead of it being April 15th, it is now May 17th.
Yay.
Yep. Keep in mind, though, if you're doing quarterly estimated tax payments, that deadline was not extended. So that's still going to be due, Thursday on the 15th.
Tell us about today's topic.
Today we want to get back to some basics about bookkeeping. Don't run away. It's not that scary, but why do we do bookkeeping, and what are financial statements, and why do we even need accountants in our lives? How do I need them to help me in my business? We're going to try to make this as simple as possible, but realize that most of our lives require on documentation, whether it's simply to return that ugly Christmas sweater or to file a claim on your insurance policy. Bookkeeping is just necessary to provide the documentation for a business.
Mary, tell us a little bit about what is bookkeeping.
Basically, bookkeeping is the process of recording and organizing a business's financial transactions, and a bookkeeper is the person responsible for that process. Bookkeeping is the primary way business owners can figure out if their business is profitable. Keeping an eye on your numbers lets you identify financial challenges early on and address them before they blossom into full-fledged crises. Bookkeeping also helps you identify areas of profit expansion, areas you might not have noticed without clear financial reports you can interpret easily. In general, a bookkeeper records transactions, sends invoices, makes payments, manages accounts, and prepares financial statements. And bookkeeping and accounting are very similar, but bookkeeping lays the basis for the accounting process. Accounting focuses more on analyzing that data that bookkeeping merely collects. Bookkeeping is essential to the vitality and long-term success of any small business. How? Primarily, you need to have an accurate picture of all the financial ins and outs of your business. from the cash you have on hand to the debts you owe. Understanding the state of your business's finances means you can make better decisions and plan for the future.
Typically, we see three basic financial statements. You have the balance sheet, the income statement, and the statement of cash flows. I like to think of the balance sheet as kind of like a snapshot in time of all your stuff. And the accounting equation, which is what helps us keep our books in balance, is really assets equals your liabilities and your owner's equity. So this always has to be in balance, or us accountant types, we kind of go crazy, sort of like a cat chasing a laser pointer until we get everything back in balance. So I tell people that the balance sheet, think of the assets as your stuff. This is everything that it takes to make the business operate. This is your bank account, your equipment, your inventory. And then imagine everything else it has to balance is your liabilities and equity. So who owns all that stuff? Sometimes the bank may own it. Sometimes maybe you paid for it on a credit card. And then the rest is your equity. What part of it that you own of all your stuff? Then the income statement. This is the revenue coming in and all the expenses going out. So think of it more like a video over a time period. It's important to look at this regularly and compare it from maybe year to year, month to month, or even week to week. And then you begin to see trends and cycles. And if you can pick up on these clues well before they become a problem for the business, think of it, the income statement, like checking on your blood pressure or your cholesterol. You need to do it regularly. And then we have the statement of cash flows. So sort of, where did all the cash go? Remember that the income statement, many times there's things on the income statement that are non-cash, such as depreciation. And maybe you had to borrow more money from the bank. Maybe you were paying off debts. So those are things on the balance sheet that aren't really showing up on the income statement, but they still involve cash. So picture the statement as cash flow as a reconciliation between the net income on the income statement and the changes on the balance sheet.
And Mark, what are the best practices when it comes to bookkeeping?
Most important thing is to make it a routine. This to become a habit, something you do on a regular basis, no less than once a week, to record all the financial transactions, including incoming invoices, bill payments, sales, and purchases. And then make it a priority to balance, reconcile, and close your books regularly too. You may do this every month, but at least every quarter. If you don't do it, you're going to forget, and it's going to become overwhelming trying to get caught up. Decide on a bookkeeping software. Manual records do provide some support, of course, but they take so long to get totals, and mistakes are too easy to make. So if you're an individual and want something very simple, use something like Quicken or Mint for your personal activity. Just remember it's single entry. With QuickBooks or Xero for small business, or maybe a more complex software such as Sage, Dynamics, or an enterprise software that might be specific to your industry, they are much more sophisticated, but they aren't overwhelming if you take them one step at a time. They're double entry systems, so they're less likely to make mistakes because they're self-balancing.
And what are the differences between cash versus accrual accounting?
Great question. So the difference between the cash and the accrual really lies in the timing of the sales and the purchases, and when you record these into your books and records. So cash accounting recognizes the revenue and the expenses only when money changes hands, whereas the accrual accounting, it recognizes the revenue as it's being earned and the expenses as it's being billed, not necessarily paid. So think of accrual accounting does a better job at matching up the expenses with the revenue. But it also involves a bit more complexity and sophistication in your accounting system. So think of somebody big like McDonald's. They want accrual accounting because when they get the revenue in every day, they want to match those everyday expenses for every day. Whereas doctors, they may want cash accounting because it may be a little while before they actually collect from the insurance companies. And they don't want to have to pay income taxes before they actually get paid.
And if you're just tuning in, this is Tax Tips Tuesdays with Patrick and Rains, a local accounting firm. And Tim, what's the subject for today?
Today we're talking about just accounting and record keeping and how you can keep things organized to help run the business better. Today I've asked Mark to join me. He's my partner in the practice, and Mary Odell, she is our assurance manager.
All right, and tell us where you're located.
We're located right here next to you at 4029 Atlantic Boulevard.
Mary, can businesses do their own bookkeeping?
Bookkeeping is an extremely time-consuming and tedious task. If you're in the early stages, you're most likely stretching yourself as it is, perhaps trying to manage your marketing, sales, PR, customer service, and inventory all at the same time. As a startup, we understand the hustle mentality. Does your accounting experience boil down to a couple of college courses? Have you ever taken the time to get to the state and federal tax codes that apply to you? Are you familiar with the term nexus? Many business owners think that they have what it takes to do their own books, and they very well might. But chances are most business owners overestimate their expertise when it comes to proper accounting. And chances are that you didn't become a business owner so you could practice bookkeeping. Hiring a bookkeeper will allow you to focus the real reason you decided to put blood and tears into your product.
Mark, what is the importance of bookkeeping?
How you go about doing your books is really up to you. But if you don't use a third-party bookkeeping service or outsource it in some way, you must take on that responsibility to keep solid records of your business transactions. If you don't, not only could you lose thousands of dollars of deductions that would be devastating, or you could lose in some compliance area with the IRS, Department of Labor, State of Florida. If that happens, you not only will be not eligible for deductions, you might end up owing these agencies money with interest and penalties.
I bet you enjoy those folks that bring in the shoebox. What would you say to them?
Oh, wow. Simply put, if you're putting your receipts and your records in a shoebox somewhere, then you really haven't even begun to keep your own books. You're not necessarily bookkeeping at that point. And it's because there's really no way to reconcile this big pile of mess, except to suggest that business owners abandon this idea and really try to find something, either a software application or, just some outsource it if you need to. But, it's good to have correct accounting principles from the very beginning. Trust me when I say that we've seen a lot of clients, and it's a lot easier to start proper bookkeeping from the beginning than to have to go through a year's worth of coffee-stained receipts in order to try to find out and reconcile and categorize something that you may not remember from 6 months or a year ago.
Mary, are there different levels of reporting for businesses needing financial statements?
Great question. There are. Many businesses have complex accounting or need more thorough analysis of their financial statements. And the types of reporting offered to businesses are compilations, reviews, and audits. There's several key differences between an audit, a review, and compilation. Essentially, a compilation requires the auditor to simply present financial statements based on the representations made by management with no effort to verify this information. In a review engagement, the auditor conducts analytical procedures and makes inquiries to ascertain whether the information contained within the financial statements is correct. The result is a limited level of assurance that the financial statements being presented do not require any material modifications. In an audit engagement, the auditor must corroborate the ending balances in the client's accounts and disclosures. This calls for an examination of source documents, third-party confirmations, physical inspections, test of internal controls, and other procedures as needed.
And Mary, what are some important factors to keep in mind when it comes to payroll?
A lot of companies outsource their payroll through a service like ADP. When it comes to payroll checks that clear the bank, businesses only post the net amount. But really, there are many components such as gross payroll, the taxes withheld, the taxes paid, retirement contributions, and insurance premiums, etc. This can get overwhelming for some people, so they simply outsource it to a payroll provider, or they can use a third party add-in to their accounting software such as Intuit Payroll.
Okay, and Tim, should businesses be concerned with sales tax?
Yeah, this is kind of a neglected area sometimes because sales tax can be tricky. Each state has different rules as to what is taxable and what is exempt. And Florida is no different, right? Take baked goods, for example. If it's a single donut or a cookie and it's considered prepared food for immediate consumption, and it's taxed. While if you get like a half a dozen in a box, well, that's thought to be a meal for later, so that's not taxable. And the sales tax in Florida is so broad, and really it's an encompassing. It says that each retail sale, storage of use, admission, use, or rental is taxable unless the transaction is exempt. So really the better question is the opposite. What really is exempt? For example, if a supermarket prepares fruit and vegetable products and they put it into a salad for sale, when it's packaged without eating utensils and it's sold as a grocery item, the sale of that prepared fruit or vegetable salad, it is exempt because it's a grocery item. However, you stick that plastic fork with it, you stick that napkin with it, now all of a sudden, this salad is a food product that's been prepared and is sold for consumption elsewhere, and it is subject to tax. It can all get really confusing, and the Florida Department of Revenue, every now and then they like to show up and do a sales tax audit. So let me just hit the four big things that they're looking for. 1, exempt sales. What sales did you not collect sales tax on, and why? Do you have an exemption certificate from those folks that you didn't charge sales tax to? And you need to keep that on file. They will look for those. Number 2, purchases. So was there something that you didn't pay sales tax on that you should have? For example, maybe paper products inside your business or supplies. The point is, you shouldn't go to the store and use your resale exemption certificate in order to buy supplies that you're going to consume in your business. That resale certificate is only good for those items that you buy that you intend to resell, because when you resell it, you're going to collect sales tax on it at that point. The third item is fixed assets. A lot of people try to avoid the sales tax when they're actually buying part of their fixed assets. And again, not all of these are taxable. For example, real property. So it can get a little tricky. And then the fourth one, which I've seen stump multiple businesses, commercial rent and janitorial services. These are indeed taxable.
A lot of great information you're sharing with our listeners. Mark, why is any of this important to a not-for-profit since they don't pay taxes?
Well, many nonprofits are familiar with the Form 990, which is the annual return for a nonprofit organization. It's due to the IRS just like any other income tax return would be. It's required to confirm to the IRS that you are still engaged in the mission to which you were granted to your tax exemption status to fulfill. Fortunately, churches are generally not required to file this form. 990 tells your story about your organization, but its format is geared to what the IRS wants to see. Remember that your bookkeeping is not merely for tax reporting, however, but to manage and provide controls over all of your activities. As management, you are the stewards of the assets entrusted to you by your donors and constituents. Without the financial reports, you can't measure your success and won't know if you're staying within your budget. Donors and grant providers want to know that you are actually putting their contributions to good use, and the 990, which is available as a public record, shows your program versus operations versus fundraising activities. If you're spending too much on fundraising, for example, they may wonder whether you're viable in terms of a charity. Then your financial statements can provide even more detail for these activities if anybody needs to know, including management.
And what are some traps for unsuspecting not-for-profits?
Even though an organization is recognized as tax exempt, it still may be liable for tax on its unrelated business income. For most organizations, unrelated business income is income from a trade or business regularly carried on that is not substantially related to the charitable, educational, or other purpose that is the basis of the organization's exemption. An exempt organization that has $1,000 or more of gross income from an unrelated business must file Form 990T. An organization also must pay estimated tax if it expects its tax for the year to be $500 or more. Some examples of unrelated business income would be church notices that their building is close to a new sports stadium. And to make some extra money, church leaders decide to sell parking during events. Well, selling parking spaces is unrelated to the church's primary mission of being a faith institution, and these funds would be subject to unrelated business income tax. Another example would be your nonprofit provides books and educational materials to area children. You've become quite popular in the community, so you decide to sell T-shirts and other apparel with your logo. Selling clothing is not substantially related to the mission of providing educational materials, so your apparel sales income would be considered unrelated business income.
This is a lot of great information on bookkeeping, and thank you to Timothy, Mark, and Mary for being a part of this Tax Tips Tuesday. As we get ready to close, Tim, would you just share a little bit about Patrick and Rains?
Happy to. Mentioned in our opening, we've been here over 3 decades now. We're a full service firm, so we do everything from compliance, business consulting, financial statements. Financial statements being anywhere from some bookkeeping, compilations, reviews, and full-blown audits. We've seen clients operating mom and pop food trucks all the way up to clients operating in, most of the 50 states. So.
All right. And if a church or a business is listening and they are in need of a bookkeeper, should they call you, Mary, at Patrick and Rains?
Absolutely. We'd be glad to help them.
Thank you so much for joining us on today for this Tax Tips Tuesday with Patrick and Rains, a local accounting firm here on 4029 Atlantic Boulevard. Please give them a call at 396-5400. Also, you can visit their website at cpasite.com. Have a great day.